Hi traders! If you're new to this channel, my name is Shay, aka Humble Trader. Welcome to the Ultimate Day Trading Strategies Crash Course. This 1 hour long crash course video will be very insightful for you if you're a beginner or intermediate trader who has a little bit to some experience in technical analysis. Take a look at the video descriptions. There are 5 important chapters in this crash course. If I had to start the journey over again from being a beginner to eventually becoming a profitable trader, this is the order I would follow in order to learn and master these time-tested trading strategies. So make sure to smash the like button and save this video to revisit and learn at your own pace. And remember to share the crash course with another person who needs it. In my case, I'll be sharing this crash course with my ex-husband, Mike Bagholder. Yeah, he really needs it. Our first chapter is understanding support and resistance. This is the foundation of day trading and swing trading. In this video, we'll go over the 4 steps to properly draw support and resistance. Now let's get started. Finding the right support and resistance levels is crucial and should be a part of the foundation for technical analysis, whether you are day trading stocks, crypto, futures, or even Forex. As a full-time day trader, I'll also be sharing some tips for utilizing these technical levels when trading short-term volatility. So if that sounds helpful to you, make sure to gently tap the like button and you will magically get more support from me without the resistance and bad jokes. So what exactly are support and resistance? Okay, no more jokes this time around, I promise. I don't want to torture you again. Support levels are areas in the charts, historically speaking, when the price sold off to those same price levels, the stock bounced off and people came in to buy the stock. So that's why on the chart, you'll see the stock typically would have bounced off a similar area like here, here, and here many times in the past before, because there's a market to support the stock whenever it's sold off to those price levels. Remember, a market, whether we're talking about the stock market, crypto market, futures, or Forex, is made up of buyers and sellers. So a support area is where more buyers came in to buy than sellers. On the other hand, resistance levels like these are price levels where sellers came in to sell the stock. So whenever the stock came up to these areas right here, here, and all the way up here, sellers decided to take profit and get out of their position. And there were more sellers than buyers. Okay, so now that we all have a basic understanding of what support and resistance means, let's go in and draw the actual price levels step by step now. Step number 1, when drawing support and resistance, you are looking for the extreme highs and the extreme lows. So on the chart over here, where do you see the extreme highs and the extreme lows that we talked about? Right? The very obvious extreme highs all the way up here. All-time highs around $159. You have another extreme high around the same area, 155. And you have another extreme levels up here, right? Here, here. We are seeing like these upside down V shapes or W shapes when you are looking on the chart. So you can see this is the tip of the V shape, and then you have another tip right here. So those are the extreme highs. And down here, you see some of the previous levels as well. Extreme highs here, and all the way up here. So these are what we call resistance areas up here. You are looking for the most obvious levels, the highest levels that stand out. And this will work the same way when you are drawing support lines. You're looking for the extreme lows. So you can see here, you can see like a V shape here on the chart. This is a support area right here, right? The inside, the extreme lows of the V shape. Another one down here because you see in the V right here, and then V shapes or W shapes, you know, all these areas are support areas because that's the extreme lows. Before the stock, you can see bounced off once, twice, couple more times, and went up to the resistance areas that we drew out. So up here around the 143, 145 area, you have another support area because you have a small V shape down here, right? You can see this will be another extreme low. So that's another support area for the stock. The reason we want to use the extreme highs and extreme lows, the V shapes and W shapes, is because we want to find the most obvious level that the market and the majority of the people see and use. We're not trying to find some secret hidden line on a daily chart. It's the opposite, right? We want to use what the big funds, the big picture, big buyers and sellers use, and use those levels when drawing support and resistance. Okay, so now that we have the lines based on the extreme highs and extreme lows, the next step for us, step number 2, is to make sure that these lines have touched a few candles at least 2 or 3 times in the past before. Generally speaking, the more times a support or resistance line has been tested in the past before, the more powerful it would be. And that would be the same case for resistance levels. You can see now that we're trading near all-time highs, there's a resistance level around the 156 area. That's been tested once, twice, 3 times over here. So that's a pretty strong resistance and we are still holding up. Down here as well, you can see a resistance level around this extreme high right here, right? Around the 122, 123 area. That's been tested once over here, second time again, and the third time. That's when it succeeded and broke out above that resistance. So while you're on step number 2, you can go in and adjust all the lines you've drawn from step number 1. So I can come in here and move the lines around to make sure that they have indeed touched the candles at least 2 or 3 times in the past. The more touches or more contacts you get from the candles, that will be even better. Remember, that will mean the levels are stronger, like we talked about earlier. And that's really the essence of support and resistance levels. These are not some magical price levels that the candles just bounced off or sold off for no reason. These lines, the technical levels, they represent significant price areas that people decide to come in to buy or sell. So that's the reason we want to make sure to chart that out when we are day trading. Now moving on to step number 3. And this is more of a very important tip I have for the beginner new traders. When you are drawing support or resistance levels, you want to make sure that you're zooming out to the daily chart or the weekly chart. I know this may sound counterintuitive or doesn't make sense since we are day traders. Sometimes we close out the trades in 5 minutes or 30 minutes. But it's actually very important for us to see the bigger picture. A lot of times I see many new traders focus on just the intraday time frames, such as the 1 minute, 2 minutes, or even the 5-minute chart. But you need to take into consideration all the support and resistance levels from the hourly chart, daily chart, and if you are swing trading, you want to look at the weekly chart. So remember always to zoom out and use a big picture when you are drawing support and resistance. Now let's move on to step number 4. And this is another very important tip for the beginner new traders, is to treat these supports and resistance lines as a general zone of buying and selling. It's important for you to understand that the support or resistance levels you draw out, or anyone else draw out for that matter, it's never going to touch exact to the cent. Generally speaking, the higher price and the more volatile the stock, the bigger the trading range would be. And this is especially true for low float stocks. For example, you can see this support area for AMD. This one's at 102, but down here is around $100. So for AMD, sometimes the support could be off by $1 or $2, and that would be normal for the stock. However, if we look at a completely different stock here, Tesla, this one is a lot more expensive than AMD, about 3 times more, and the range for the support and resistance would be very, very different as well. It's a lot higher. So on the chart, you can see the support area here, I would say, let's say $1,000. There's a range between 1,019 and down here, $987. So that's more than 20-30 points range for this rough support area on the daily chart. And it's the same up here. You can see this is a rough area of support for Tesla stock. And the low of this day was around 1,158, and down here, the previous day, 1,146. So that's the difference of 10 points, but it's still in the same area of support. Same thing down here for resistance. Up here, the resistance was around 1,104, and over here, right, same area of resistance. This one is 1,116. So that's where you get a range of at least 10 to 20 points for Tesla stock. Again, always draw out the support and resistance on the higher time frames, the daily chart, the weekly chart, or the hourly chart, and draw out the most obvious levels, the extreme highs and the extreme lows. And don't forget that these levels should have touched 3 candles or more in the past before. This method of charting out support and resistance makes the chart very clean and easy to read when day trading. And that's all I need to day trade every single day. Just simple support and resistance, alongside with sometimes VWAP and volume. So I don't need to rely on any fancy or gazillion indicators. So that was support and resistance. Now that you learned the proper 4 steps, you have the right technical analysis foundation in place. But if I was mentoring you personally today, I'd say that drawing support and resistance alone would not make you profitable if you don't understand price action trading. In the next chapter, I'm going to explain price action in 3 golden steps. And there's at least 1 trading strategy for you to take away and apply to your own trading after this video. So here you go, I'm giving you 3 golden tips for price action trading. Look out for candlestick wicks when trading breakouts or breakdowns, the golden reversal time, and how to know the front side and the back side of the move. And 1 bonus tip on technical analysis if you stay till the end of the video. Price action refers to the rhythm a stock moves up and down in prices. Understanding price action is very important, especially if you're trading short term or any momentum or scalping. And also, understanding price action and risk management are the 2 very important milestones that really helped me become profitable when I was brand new to day trading. Price action tip number 1. Look out for candlestick wicks on the top and bottom when trading breakouts and breakdowns. So when looking at the daily chart for BBBY here, you can see that on the daily, before this huge breakout, you see these candlesticks here that has these long vertical lines at the bottom. Here, here, and here on these couple of days. Now this is what we call a lower candlestick wick. When you see candlestick wicks at the bottom, that means the weakness on the stock is getting bought back up. What does that mean? That means a lot of retail traders, people on social media, and including Ryan Cohen, they think the stock is really cheap, so they want to buy it for a breakout. So if you also draw a trend line at the bottom of the daily, you can see that these wicks, they actually create higher lows, meaning that the bottom of the wick on each daily candle is higher than the one before, and that's technically bullish. As you can see, the stock is getting bought up around $9 and $10 area for a couple more days, and that's what led to the next breakout on high volume, right? You need people buying up the weakness to load up on the stock, and that's where a lot of times when you see these lower wicks on the daily, this is possible to lead to a giant breakout such as BBBY. Now after the breakout from around $11 all the way to almost $28, $30, you see on this vertical wick on the candlestick on the top this time around here. Now if we look at the daily, this huge breakout with the almost 400 million volume day is this intraday chart right here. You can see this wick around $28 area. If we draw a line here, 28 here. That's also the higher day for this giant breakout day. You can see on this day, when the stock held the breakout for throughout the entire day pretty much, and then it dumped from 26 to all the way to $19 at the end of the day. this kind of dump is what created this wick on the daily. And this is technically bearish. So this is the opposite of what we just talked about. Wicks at the bottom here on the daily means the stock is getting bought back up and it's setting up for a big breakout. However, when you have broken out on the daily, but you end up with a wick like this, a giant end of the day sell-off from 28 to 19, this is technically bearish. And a lot of times you're gonna see this retest of the breakout level the next day. Now moving on to the second day of the breakout, you can see this $28 line here, right? We know that that's gonna be the resistance from the day before. And if you draw this line around across, you can see that's the same area that's being tested at the open. However, we're looking at intraday chart here now. You can see another wick here on the first 5-minute candle of the open. Another wick here, that means the stock actually successfully broke out within the first 5 minutes. However, you end up with a wick. That means the stock broke out from $28 to $30 that you can see here, but is unable to sustain the breakout. Now, why does that happen? And this is really why price action is so important. When you see this kind of false breakout, that means first, it's a short sellers getting squeezed. And unfortunately for this stock, BBBY, once you work out the short sellers, there's no real buyers coming in to buy the stock. Right? If you think about it, if this actual buyers buying above $28, $29, then the stock should be holding really well above the $28 breakout point. So that's why you really need to look out for these intraday wicks, especially when they line up with a daily wick from the day before. So that's the reason after multiple attempts to break through that $28 area, once at the open and once again around 10 o'clock, the stock was still unable to hold above 28 and it ultimately unwinded to the downside. And this kind of price action on the candlestick wicks on the top and bottom is especially true on meme stocks because they are really socially driven, meaning that all the buying interests are mostly from the retail traders. And I think we all know by now the retail traders are the most emotional traders out there. And you can see the same thing on AMC, one of my favorite stocks to trade. Wicks on the top, you can see eventually led to the unwind, especially when you see multiple wicks like this that's testing the same area. Multiple wicks on this day here with the BBBY breakout, and once again for a couple more days following. When you see wicks attempting to break out once again and failing to break out, that's ultimately going to lead to the unwind to the downside. I have a little challenge for you guys. Comment down below with a recent stock that you traded, whether it's a meme stock or a stock like Tesla, and apply the price action for the candlestick wicks that you just learned. So find the time period on your chart and let me know what you find. Then go back test on the daily chart with a price action tip you just learned, and let me know what you find on your stock in the comment section below. Moving on to price action tip number 2, the golden reversal time. So this used to happen a lot when it was brand new. I will have a stock that I'm watching, for example, AMC here. You can see at the open it's dumped from $24 all the way to $23. And I take it off my watch list and only later to see it bounce from $23 all the way to $24, almost $25. And that's because a lot of times when stocks sell off from the open, there's that golden reversal time around 10:30 to 11 o'clock market time that the stock will bounce. So this is a perfect example here. AMC here on this day sold off from 24 to 23. Now if you look at the bottom around 10 o'clock to 10:30's area, that's when the stock started bouncing. And this is a very decent bounce from 23.10s all the way to almost 24.50. So we're talking about $1 bounce here. And so this very simple reversal bounce strategy is what I used to trade part-time before I went to work. This is like almost 7-8 years ago. And remember what we learned in tip number 1 with the candlestick wicks at the bottom? If you draw this line around the $23 area, around 10:30, this is also matches with the daily chart where all the wicks at the bottoms are. So when you have multiple factors lined up for a bullish move reversal to the upside, such as 10:30 reversal time like we talked about, and tip number 1, the bottom wick on the daily chart, then this is worth for a bounce on the long side. Price action tip number 3. Understanding front side and back side of the move. This tip is very important if you're trading small cap stocks, especially those low float runners such as MEGL. And whether you are usually long bias and short bias on these small caps, you definitely want to learn this. This is a daily chart of MEGL. This is a very low float stock. As you can see, recent IPO'd around $50, went all the way to over $200 and sold out from $200 down to $12, $10, and $9. This is a true piece of stock that a lot of times can actually create a lot of momentum to the upside. So on these kind of small cap sell-offs, a lot of time you get a giant day with a lot of volume, such as this one, 75 million volume traded, and this is what we call the first green day. This is a day where the stock went from $10 to $18 breakout, and this is the day we're talking about. On this day, the stock, have a small gap up pre-market and consolidated around this area here. You can see that matches with the daily support, and actually broke out to $18 to a close of almost $19, $21 after hours. Now, if you zoom out on the 5-minute chart, which is what I like to do, if you draw a simple trend line here, if I draw it from the lows from the first green day of the breakout, and all the way through matching the lows and all the support intraday near power hour through the pre-market area over here, you can see this is a giant trend line to the upside, and the high of the after hours is around, let's just call it $22 here. Now, a lot of times, what the front side of the move is if the stock continues to hold this trend line here. So technically speaking, if the stock is going to continue breaking out, holding the front side of the breakout, then on this second day here, it really needs to hold above the $20, $21, and ideally over the higher day from after hours. So it really needs to hold at 22s. So if you're long biased, that's what you want to look out for. You want to see the stock holding this giant trend line to continue the breakout to higher. On the daily, if this thing had held, it has upside above 22, all the way to $30, $40 and above. But if you're long already, it's really important to watch out if the stock breaks down that trend line we talked about. You can see on this day, the stock had a false breakout, another wick again on the breakout in the morning, around 22s, and rejected and break down below 20s and went to $19. Now, it's actually really common for these small cap, low float, volatile stocks to break out and break down. But if it stays below this trend line, usually I look at after 20 minutes or so, if it's staying below this, then that means the front side of the move is broken, it's over. And what follows is usually the back side. But if you are short bias, like I did on this MEGL chart, this is what I look for. This is the kind of signal that tells me to get in for short entry on the stock. So that's what you can see here. Once this MEGL broke down the front side and started forming lower highs, $20 rejection, that's when it sold off all the way to $14 over here. And if you look at $14, this is a day of the prior day's support that led to the breakout into the close and into the after hours breakout. So that's why it's, you get a pretty decent move. We're talking about $20 all the way to $14. And then in the next couple of days, if you zoom out, you can see it gave back everything all the way down to $10 where it came from. Now, if you stay through all of these 3 price action tips, first of all, thank you for staying with me so far. And here's the bonus tip I have for you, especially if you are relatively new. We all know that technical analysis and support and resistance is crucial to trading. However, as traders, we need to understand that support and resistance, they can be subjective. So for example, if I was a long bias trader, I'm looking at this green line here, 2460 support. Like we said, long wicks at the bottom of the candlesticks intraday. So I see the support and I want to be able to just bounce it for $1, $2 towards a resistance around $28. So I will long the stock for a quick scalp, essentially. This is a trade where if I got in here, I would be really quickly selling into this wicks here, 26 and 28 if we get there. So all I'm looking for is a $2 bounce. I can be very bullish and my time horizon is only about 10 minutes. However, another trader who's more short biased can be looking at the same chart and see a short play to the downside. Like we said, when the stock rejected at $28 here, daily wick here, 28, and also intraday wicks, this red line, then this short seller may want to swing it for a couple of days, looking to swing it all the way to the downside from 28 to, maybe 23, $20 and below to $11. Both of these theses are valid. So that's why it's important to form your own trading plan with an expected time horizon and stick with your plan using your own technical analysis and price action to help you out. So that's the reason I always stress on this channel, do not follow chat room alerts or live stream trading or copy trading because you simply do not know the person's trading plan or time horizon. So what do you think? Do you think that now that you can put support and resistance along with price action trading, things are finally starting to make some sense? Let me know in the comment section below. Now that the basics are covered, it's time to bring out the top shelf strategies. That's right, it's time to learn how to buy the dip properly and how to time your buying entries successfully when trading. This is one of my personal favorite strategies that I've been trading since 2015, so it's a time-tested strategy that you don't want to miss. Let's finally dive into the market recap. So if you kind of look at the market on SPY, we're finally starting to rally off the lows. So if you think about it, the long strategies on buying the dip would naturally only work once the market, the overall market, the S&P 500 starts bouncing. So on these really extended red days, there's literally no point trying to buy the dip or going long on any of the stocks. So that's tip number one. Always check the market sentiment. So today, the market, had a decent bounce the last couple of days. We're bouncing off the lows from the rug pull from the Fed meetings. But we're seeing some decent rally. You can see we're up continuously for 1, 2, 3, 4 days. So when I see that happen, I'm looking at a lot of what I call market stocks, meaning the large cap stocks that follow the market quite closely. So it has to be the large cap stocks, cannot be the small caps. So that's your tip number 2, stock selection. It has to be the large cap stocks that you're trying to buy the dip on. Because when it comes to the small caps, their strategies and the long strategies set up specifically is a little bit more nuanced. So we're gonna have to talk about that in another video. So back to stock selection. When you're trying to buy the dip, you want to pick the large cap stocks that has shown you, at least on the daily chart, that it has the ability to bounce. So if you look at Nvidia, which is one of the first stocks I started longing today, around 166, I was trying to hold on to potentially to 169, 170s and higher. This one, I only ended up catching about almost 2 points from 166 to 168. So you can see I'm bouncing this around the 166 area. Now, if you draw a line on the daily chart, you can see this whole 155, 160, 166 area on the daily chart. If you kind of zoom out right here, it's kind of like the bottom of the daily chart where this stock has specifically in the past shown that it can bounce from 160s all the way to 190. So we're talking about a potential of a 30-point bounce, at least on the daily chart. I don't think we're gonna get that in one day. But for us, day traders, we're trying to capture that bounce for $1, $2, sometimes 3 or 4 or even more when the market really rallies. So that's an important key takeaway. Stock selection, large cap stocks that can actually bounce, no trashy small cap stocks, and of course, the market sentiment. You want to look at longing and buying the dips when the market started to bounce. So this is the first trade I did on alongside Nvidia, and this is one I did okay, but I didn't time it that well because I want to show you the second one, NEO. This one I timed a lot better. Now, if you look at the intraday chart on NEO and Nvidia, I know they are in different sectors. One's a Chinese stock, one's an American stock, but if you look at intraday, it kind of has a similar chart structure. Because if you kind of look at both of them gapped up overnight with the market. Nvidia gapped up from prior day's close 177 to 174 pre-market. Sold off to the 166 area I was looking at for the long, for the bounce, right? You can see this thing sold off from, almost 10 points, 8 points to a downside before the bounce. Now for NEO, it's a very similar story. If you look at the way it gapped up from prior day's close, $24 to $24.60, $24.70s. So a decent amount of gap up. And then this thing also sold off at the open. So they both react similarly to the market. So whenever I see like a market sells off happens after a significant gap up on the individual stocks, usually the best time, I actually don't know if I want to reveal this. This is like one of the secrets. Okay, these are some golden tips that not a lot of people talk about. So if you're still watching here, make sure to hit the like button and comment down below buy the dip, so I will know that you are actually watching this, and I'll make more recap videos with more of these golden tips in the future. Now, the big difference, so even though the chart and the entries are long, they are all long, now, NEO and NVIDIA, even though on the surface, they may look quite similar. But what differs is the timing. So you can see I went long around, like this is what, if you look at, I know the dash charts is like really small, but this is almost just above 10 o'clock. 10 o'clock, and this thing bounced from 166 to 169, and it pulled all the way back to 167s around this 10:30 to 10:40. So you can see the big bounce on NVIDIA is actually around 10:30 to 11 o'clock right here. You can see it bounced from 167. This is the big bounce to 170. Now, NEO, on the other hand, I'm saying that this is a better executed trade because the timing's better. You can see this one actually executed around 10:30 and held it for the bounce from $23 all the way to 23.20s. I sold some, re-added back to full size around 23.10s, and I sold it into 23.40s. So my ultimate price target was actually 23.50, 23.60 VWAP area, but I caught as close to 23.44. So that's pretty good too. But the big difference here is the timing. So there's something around about being 10:30 to 11 o'clock. That is usually the golden time for bounces. If you are longing stocks and buying the dip, right? We're talking about buying the dip on the huge pullback that we're seeing right now. NEO, you can see gap up, sell off. NVIDIA, same thing, gap up, sell off. So that's a golden time to buy the dip whenever you see the stock sell off after a huge gap up. Now, that's not the same as buying the breakout. Buying the breakout is a losing strategy in this kind of market condition. Just don't do it. I know it worked well in 2021, 2020, but if you buy the breakout in this kind of market in 2022, like 8 out of 10 times, you're gonna get a rug pull. So that's the third golden tip, and not a lot of people know about this, is the 10:30 to 11 o'clock is the perfect timing to buy the dip and on these large cap stocks. You can see it even on the stocks I shorted. So I went long on NEO and NVIDIA. The stocks I shorted are Alibaba and Chewy. Notice that my short entry is a lot earlier on than my longs. You can see I shorted Alibaba from 120 starter. I got a little bit chopped up here, but ultimately added into the VWAP bounce around 120s and down here 119s and shorted into the lows to 117.80. And notice when I've covered all my shorts around here, if you look at a time frame, this is also 10:30 to 10:40. So that's I covered everything here because I know that it's about to bounce. So even though I didn't go long on Alibaba, the idea, the concept is exactly the same, right? If you are a short seller, you want to cover when you know the buyers are coming in. So that's going to help you protect your profits if you are short. Now, one more example here is Chewy. And notice all of these stocks are in different industries. They're all just large cap stocks. So Chewy, same idea. I only went short on the stock, but the bounce also only started to happen around 10:30, 10:40. Coincidence? I think not. So Chewy, this is also one of my favorite strategies, but it's on the short side. It's when a stock is also gapping up on very thin volume after multiple days of a run. A lot of times you see kind of like a rejection of the pre-market highs around 40s over here. Little wick here. I was actually late. I got in around 39.670s, and this thing just fell off and tanked to prior day's close. So I covered some of it around 38.90s and all of it around 38.20s. The one thing I could improve this short is to hold it all the way to 10.30, kind of like what I did for Alibaba. So that would improve my profit ratio for the short setup. So as you can see, it's really beneficial to understand both long, whether it's buying the dip or buying breakout, and also shorting, because you want to balance the two psychology, right? Remember, as a short seller, you want to cover your shorts when the buyers are coming in. And if you are a buyer, you want to buy the stocks when the shorts are covering, when the shorts are getting squeezed. And that's just how the market works. So just to recap on these 3 golden tips for buying the dip strategy that's working out really well in the current market. So number 1, again, market sentiment. The market needs to be starting to bounce. If you look at the S&P 500 or the QQQ, it needs to show you a bottom on the daily chart and not a folding knife. So if that happens, if you see a folding knife, do not go long. Second tip is a stock selection. Stop trading these trashy penny stocks. They might go up, but they also might go down. So, whether they go up or sideways, it's anyone's guess. It's the large cap stocks that can show you historically they have a good chance of bouncing off the lows. So that's tip number 2. Tip number 3 is the golden time frame of 10:30 to 11 o'clock. Usually that 30-minute period, give or take, is the best time to go long and bounce the stocks. So everything is still true after watching this video. However, if you are starting out this year, I would adjust it a little bit due to a lot of uncertainties with interest rates directions this year. I think you're gonna see many more emotional overnight gap ups and gap downs in the market this year, which is why I think it's very essential for you to learn the next strategy to properly trade the gap up and gap downs. I know it's been a long video. If you stuck around for this long and finished watching Buy the Dip strategy chapter, you are a real one. Let me know by commenting artichoke dip down below, because that's my favorite kind of dip to buy. Alright, there are 2 key factors to this gap trading strategy. The first one is based on short-term technical analysis, and that is whether we see a gap up or a gap down overnight.
Alright, for those who are not familiar with this term, an overnight gap refers to a drastic increase or decrease of the stock's trading price during the pre-market sessions compared to the previous day's closing price.
Let's look at this example here, DoorDash stock. You can see in the previous day's closing price on this day, the stock closed around $75 up here. Now the next morning, overnight, you can see the stock gap down all the way down to around $69, $68 pre-market. So that means the stock has sold off, gapping down 10% overnight. Generally speaking, a technical gap down like this one is not enough to indicate whether the stock going to rally higher or going down lower. But in this specific case on Dash stock, this is still a valid short strategy, and we're going to explain why later on. Now that we understand what's a technical gap down, it should be very easy to understand what a gap up is. Looking at the stock TDOC, Teladoc, aka one of the many bag holding positions, disruptive investments at ARK Invest. You can see in this example, TDOC, the previous day's closing price was over here, around $38.70. Now the next morning, the stock had gapped up pre-market to around $40.40. That's almost a $2 per share overnight gap up, or a 5% gap. As you can see, this setup overnight is very different from our previous example of a gap down on Dash stock. So for TDOC, this overnight gap up, even though it's purely technical, in the current market environment, this does set up for a nice short for this gap trading strategy. So on this TDOC specifically, I was looking at the $40 to $41 area for short entries and looking for it to break down some pre-market support and eventually to gap fill all the way down to prior day's close where it came from at $38.70. I personally messed up on this trade. As you can see here on the chart, I was right on the short thesis for this gap up strategy. However, just off on the timing. And unfortunately, I couldn't hold on long enough to see the stock eventually break down. But this strategy thesis was correct. You can see I traded the same strategy on all of these stocks in the past before, such as vwap, Nvidia, and AMD. Now you must be wondering,
but Shay, this is not what you said last year. Last year, many gap ups that broke out higher are good longs and all the stocks went to the moon.
The sentiment is much different now. Unless you want to end up working at McDonald's, stop buying breakouts. Nothing wrong with McDonald's, by the way. I still love the Oreo McFlurries and fries. Yes, at the same time. And no, I'm not sponsored by McDonald's, which is why I have to ask you to smash the like button. And I promise you I'll share. Now pay attention, my fellow humble traders, as we're about to dive into the current market outlook and trader psychology. I think it's very crucial that we understand the why or the psychology behind these huge gap ups or gap downs, especially if you're trading short term in a current market environment. Almost all the big moves this year are driven by one thing and one thing only: fear. The fear of oil prices spiking, the fear of negative economic data, and the fear of inflation, and the list just goes on and on. Fear is a much stronger emotion than confidence or optimism. That's the reason the bulls take the stairs and the bears take the windows. There isn't a lot of confidence in the market, and that's why with a lot of breakouts and overnight gap ups, you'll see stocks sell off more often than not. I've been thinking of posting regular market updates on all my social media accounts so I can share my thoughts on the market with you guys. So please comment market update down below if you would like to see them. Let me know in the comment section below and make sure to refer to the description for my real social media accounts. So earlier we talked about the first factor of this strategy, and it was the technical gap up or gap down. The second factor to the strategy is whether there is negative or positive catalyst. Let me explain. As I've talked about in the recent trading recap videos, there are large cap stocks that make overnight moves with their own company catalyst. It could be earnings, potential deal going through, or the newest drama involving Elon Musk. For example, GameStop stock gapped up and moved higher overnight after announcing they are doing a 4-to-1 forward split. Or DoorDash, in our earlier example, gapped down because of negative news that Amazon is making a move into their market. And guess what? No one dares to fight Amazon, especially after seeing Jeff Bezos' badass outfit on a yacht over here. On the other hand, there are stocks that do not have their own company-specific news. For example, the Teladoc overnight gap up we saw earlier, it was gapping up to what we call air. Basically, the company did not have strong catalyst to support this overnight gap up. It's a contributing factor to the short thesis on this gap trading strategy. Take a look at another example here, Uber. As you can see here, the stock gapped down overnight due to the same catalyst as Dash. Amazon takes a stake on Grubhub and extends the food delivery service to their Prime membership. This move from Amazon would directly steal market shares from companies like Uber and DoorDash, who are operating in the same food delivery space. Therefore, this Uber stock reacted negatively with a gap down. Prior day's close was around $22.30. Pre-market, it sold off into about $21.80. You can see on my chart here, the strategy I like to use on these gap down stocks is to wait for the bounce in order to short into it with a better risk reward. So on this Uber stock, even though pre-market is trading at $21.80, I waited until the spike to test $22, and ideally I was actually waiting for higher, around 22.20s to short into it. And my price target will be the pre-market support around 21.70s and the lows of the day around 21.40s, eventually probably to $21. It's very important that you wait for the bounce for the right risk reward to short into it. Don't be that person who shorts the stocks like these on weakness at pre-market support or lows of the day. Sure, maybe that might work once a while, but in the long run, that's a very high risk entry. I will repeat, Don't short it at the bottom over here. Wait for the bounce and then write it down and collect your profits. Here are a few key takeaways to remember about this gap trading strategy, especially on the short side. The higher the overnight gap up is, the more likely it is to sell off. The lower the overnight gap down is, the higher you should wait for the stock to bounce in order to short. Both of the above tips are all based on technical analysis. However, please do not forget about the third key takeaway, the fundamental catalyst. Because technicals tell you when to enter, but fundamentals tell you the thesis and how hard to hit the stock. This gap trading strategy we just talked about, you will see this play out within the next couple of weeks, now that earnings season is approaching. So you best be prepared to trade all of these overnight gap ups and gap downs that we are about to see. I know personally that I'll be utilizing this gap up and gap down strategy a lot in my own trading this year. Before we move on to the next strategy involving my favorite indicator to trade with, if you are liking everything so far, but you want an even more in-depth trading education program, along with one-on-one coaching and a community to trade with, then make sure to check out the Humble Trader community down below. My next video will take you from a Padawan to a Jedi Master. I'm about to tell you about my favorite trading indicator, which is vwap. This is the key to many of my trading strategies. I'll be showing you today how to use vwap as key level intraday, how to maximize your profit with vwap, and last but not least, how to use vwap to spot short trap consolidations. vwap is a very powerful indicator. It stands for volume weighted average price. It's very powerful for traders because it takes in both price and volume into calculations. It's not like the moving averages like EMAs and SMAs where the formulas only average out the price. Most of you guys probably know by now I like to keep my charts very clean. All the indicators I use on my chart are this blue line here, which you can see. This is the vwap over here. I use vwap and volume, and that's all I use. So just a quick overview here. If a stock is trading above vwap, so you can see the stock APE, AMC Preferred Equity, if the stock is trading and holding above this blue vwap line, then the stock is perceived as bullish. That's due for a bounce. Now, on the other hand, if it's staying below vwap, like the day IPO'd, you can see the stock broke down vwap, that blue line, and stayed below it all day long. Then that's perceived as very weak. In the most general sense, you want to short stocks that's below vwap and long stocks that's holding above vwap. So the first tip I have for you is using vwap as intraday key support. Now, looking at the stock here, INDO. This is a small cap stock on screen here. Very low float stock. It's a former runner. Previously on the daily, you can see it ran multiple times in the past before. Over here, this day it went from $9 to all the way to $70 and $80. So this baby can go. Now on this day, the stock actually gapped up with the rest of the energy stocks. Now when this stock broke above the $9 area, which you can see here on the daily chart, then this is what we call a daily breakout. So you can see the stock broke out above it right at the open, broke out from $9 to $9.50, and where did it pull back to? It pulled back to VWAP. You can see it pulled back a little bit to 917s, may try to attempt another new highs, 980s, and each time it pulls back, it's holding well above this VWAP indicators. You can see it's holding 930s and slowly consolidated, making higher lows. You can see it bounce out VWAP, create another new higher low here, 960, and that's when it broke out, squeezed through the higher day and into the 11s. So this is one of the best ways to use VWAP indicators. First of all, you want to make sure you have a daily breakout on the chart, and this applies for both small cap and large cap stocks. And especially early in the morning, if you see the stock is breaking out but holding back just around VWAP, holding higher lows, then a lot of times that's a great entry on the long side, and you can ride it to the moon. Okay, not to the moon, but to $11 on next leg breakout. You can see it pulled back once again. This time around, it held well above VWAP and made another breakout move to the upside to $12. Like we just said, it works just as well for large cap stocks, if not even better. Now we're looking at OXY, another energy stock. This stock was extremely strong out of the gate. Same idea here. You can see it broke out right above yesterday's highs of $71 right at the open. Look at the volume down here, extremely strong. So we have a daily breakout with strong intraday volume, and you can see the stock, held well above VWAP for each of these 5-minute candles. This is how you know the stock this is a strong breakout, and you can use any dips towards the VWAP area as your long entries. Now, if you're more short biased, which you guys know sometimes I am for the small cap stocks, this is not a chart you want to short. I saw this thing this morning. I did trade it on the long side, and I did tell everyone, hey, don't short this, especially when it's a large cap stock. You can see every single dip towards VWAP is getting bought back up. Every single attempt to break down towards VWAP, it's getting bought back up. That just tells you how strong the stock is. So if you are short biased, you don't want to short this thing. Now, this brings us to tip number 2, using VWAP to maximize our profit, especially when the stock is breaking down. You guys know that I love shorting meme stocks, whether it's BBBY or AMC in the past before. And the reason I love it is because once the stock, as you can see, breaks down VWAP, it stays extremely heavy. And a lot of times they fade all the way into the close. So looking at this stock here, BBBY, it's a meme stock that's been getting a lot of attention in the last couple weeks. You can see this stock, this red day down here. The stock I sold off from all the way $26 down to $18, and now gapping down to around $10. Now this day I actually traded first on the long side for the stock. I longed the stock from $10 and sold into 11s and 12s. And once I see the stock staying heavy and breaking down red to green area, and went red on the day, and then now it tried to bounce out VWAP, right? You can see earlier we talked about when you have a breakout, that VWAP should be your bounce area. But in this stock, it was extremely weak. You can see it barely bounced above the VWAP. It bounced maybe like 30 cents from 10.30 to 10.60, and it just cannot hold above it. So once it's broken down VWAP, that's my sign that, hey, if I was long, I need to cut it now, because I know that once a stock like this, it breaks down VWAP, it's likely to fade all day and staying below it. So that's exactly what happened. On this 5-minute chart, BBBY, you can see once I bailed on my long side, it dumped below VWAP from 1030s all the way down to 980s. It attempted to bounce one time. That VWAP now acts as resistance. You can see it tried to test that blue area here, 1030s, but it's unable to even retest and reclaim that area. So that's how you know the stock is extremely weak. So you can see that's how the stock, rejected that VWAP area multiple times and continued to downtrend all day. It's the same idea the next day as well. I mean, if you look at the next day, which is this morning, had a small gap up overnight, tried to break out with the rest of the market. You can see a lot of wicks around the top end of the candlestick. And if you learned anything from our price action trading video, all the wicks on the top end of the candle, especially around resistance, that means the stock is getting sold into. That means it's weakness for the stock. So these meme stocks, AMC, BBBY, and now I'm sure APE, they'll trade very similarly. Once they break down VWAP, they fade all day. So if I was short biased, to maximize my profits, I will try to ride it out for the entire day on the short side. And in fact, I've actually swung short AMC multiple times for multiple days. The next tip we're gonna talk about is using VWAP to spot short trap consolidations. This is something we've seen many times, especially with the low float runners, the meme stock runners. A lot of times, this is exactly what led to the huge breakout. So that's why it's very important to understand what short traps are and how to use them to your advantage. But before we go there, make sure to trap the like button, just like how my ex-boyfriend almost trapped me. What? But don't worry, I escaped, so things are all good. But remember to smash the like button. So speaking of short traps, I do think VWAP is the best indicator to use for spotting this kind of price action. So looking at APE now, AMC preferred shares, today especially, when it started breaking down VWAP, that's when I started getting in short. So I was short the stock. I did cover some around 660s, but I did think that, hey, since staying below VWAP, like we talked about, it looks like it's gonna fade all day, just like the BBBY and AMC example we talked about. However, if you go to the 2-minute chart now on APE, you can see, yes, it dropped all the way down to 650s, bounced back to 690, and slowly faded down lower. Now, a lot of times when you see this, you see the stock holding a double bottom. That's what these meme stocks, they usually, how they trap you. They have a small false breakdown from 654 down to 649. Take out some stops, take out some weekends from the retails, and then that's when it slowly reclaim back to VWAP. So a lot of times they go straight back on really low volume. So you can see went from 650 up to VWAP, 690s. I had a stop around like $7 area. I didn't get stop out. I was thinking, okay, it might be a fake out. That VWAP could act as resistance like we talked about earlier. But no, this thing actually break down a little bit and held a higher low. So what higher low looks like is this low right here. If we kind of just draw a line here, this low area is higher than the previous low, the double bottom. So if you go to the 5-minute and draw a trend line, this low, the higher lows is forming below VWAP. It's lower than the one before. So a lot of times this is how you spot short traps. When you start seeing that on the higher time frame, it's creating these higher lows and reversing the trend after the stock had double bottom. But a lot of times the VWAP reclaim is a telltale sign. When it start doing higher lows below VWAP and breaks through it, that's when I got stopped out. So I'll show the chart right here. I had to stop right here around 702, 710s. It was a good stop. And you can see once the stock broke out above VWAP, and I stopped out, thank God, you can see the squeeze through the higher day to 740s, 750s. If I was still stuck short, I would have gotten squeezed out. So this is how you know it's a short trap. They break it down to seem like it's really weak, for an extended period of time from 10:50 all the way to an hour, 10:40, 11, and that's when it started breaking out. Short traps like this usually stay below VWAP during the middle of the day. So that's why around 11 o'clock, 12 o'clock, that's like the prime time for short traps. So this is a good example here, and the stock actually held above VWAP for the rest of the afternoon. The VWAP around $7, 710s area, it held really well. So I wouldn't be surprised if it gives another secondary breakout move the next day. Now back to the stock INDO we used earlier as an example, the low floater energy stock. So we talked about the breakout earlier to 1250. Now a lot of times when it starts to break down midday, looking like it's weak, like we talked about breaking down below VWAP, these low floaters, they're really good at trapping more shorts. It's a low float stock. A lot of times it does attract short sellers, me being one of them. Not today though. I saw this short trap, I'm just like, no, there's no way I'm shorting this. So it breaks down VWAP and actually, try to create a lower high, making it look not very bearish, looking like, okay, it's gonna form a lower high around here. You can see, if you are using technical analysis, you'll think that, oh, this thing is, this is a higher day. Now it bounced around VWAP to test the lower highs, and now it looks like it's gonna be another low high and start breaking down. But no, actually what it did is it held the higher lows below VWAP. So this is how they trap you if you are short bias. You want to be very careful because in the middle of the day, you can see coincidentally when they were trapping, you can see down here, the volume is extremely low. So once again, higher lows on 5 minutes below VWAP around midday, lunchtime on low volume. That's when you want to be very, very alert if you are short biased, because otherwise you can get trapped once again. Once this thing reclaimed over VWAP around 1:30, that's when it broke out and went to test $12 again. Hopefully you guys enjoyed these 3 tips for how I use the VWAP indicator. To use it as intraday key levels, to use it to maximize my trade on the short side, and to use it to spot short trap consolidations, especially midday. When I mastered trading with the VWAP indicator, nothing was the same ever again. This is something I still use every single day in my own trading. If you can understand and properly apply these 5 concepts and strategies, not only can you level up as a trader, but you're also destined to lose your social life because you're about to be very focused on your own trading in the next couple of months. Come on guys, social life is overrated. I hope you enjoyed this masterclass on technical analysis. Make sure to like the video and subscribe to keep an eye out for even more lessons to come. If you want to continue learning, don't worry, I got you. Check out the beginner day trading playlist on my channel. I've made over 20 free video tutorials with step-by-step detailed lessons to help you get started on your trading journey. But if you're looking for even more accountability, including one-on-one coaching and a community to trade with, then make sure to check out the Humble Trader community down below. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.